Tax sale overages are monies that are left over when a property is sold at tax foreclosure sale and that are claimable by the former owner. And the way that it works is when a property is sold at a tax foreclosure sale, that happens because someone didn't pay their real estate taxes. If you don't pay your real estate taxes for 3 to 4 years, depending on the jurisdiction, they will sell your house or your property to recover those taxes. Now, when the properties sell at tax sale, generally speaking, they sell for a lot more than that tax bill. Mathematically speaking, taxes are a little under 2% of the property value per year on average. So we'll use 2% because it's an easy number to work with. Average house in America is worth about $400,000, which means that the average house in America has an $8,000 per year real estate tax bill. If that gets 4 years behind, the local jurisdiction will foreclose because they've got to collect that tax money. They need to pay the police, the firemen, the school teachers, repair the potholes, pick up the trash, run the mayor's office. They've got to do all those things. So they're deadly serious about collecting those real estate taxes. If you took your $400,000 house and let's say that you fall 4 years behind at $8,000 a year, that means you owe $32,000 in real estate taxes. Plus, of course, we're going to have interest and penalties. And so let's just double that money because I think that's safe to assume that it would double the cost with interest and penalties. So instead of $32,000, $8,000 a year times 4 years, we have $64,000 that's due. So we have a $400,000 house, and the process for a tax foreclosure is that that house goes to a public auction. And lots of people attend those public auctions. They're bidding, me. Plenty of them they're bidding, looking for a bargain house. And generally they do get some pretty good deals. Usually houses will sell for 20, sometimes even 30% off of retail at those sales. So on your $400,000 house, let's say that it's sold for a 30% discount. So it's going to sell for $120,000 less than its retail value. So if we took our $400,000 house, deduct $120,000, that leaves us $280,000. And I think, wouldn't you agree with me that if you picked up a house worth $400,000 for $280,000, you'd be pretty excited, right? Yes, of course you would. So bidders at tax sale are happy to pay that kind of money for a house. But think about it, you only owed $64,000 in taxes. So there's a big difference between $280,000 sale price and $64,000 in taxes. For round figures, that's $215,000 in difference. That is the money that becomes overages money. The reason it becomes overages is because the taxing authority that holds the foreclosure sale, they absolutely get to keep the money that they're owed. So $64,000, so inclusive of interest and penalties. So they're going to keep that, but then the remaining money is not needed for the taxes or the penalties or the interest. Those are all accounted for. Those monies are available for the former owner. And that's where tax sale overages come from. These are available in most states. Now, there are a couple of states that don't give the money back. Colorado doesn't give the money back. Wisconsin doesn't. Illinois doesn't because of the way their process works. Most of New York State, they don't. A couple of jurisdictions they do, but for the most part, they don't. But other than that, the money is available. And so it's generated, by the thousands every day. And by the thousands, I mean thousands of properties are sold at tax sale every day, and thousands of those have overages associated with them. Now, your typical overage is going to range, I would say sort of the bulk of them, $20,000 to $60,000 is the bulk of them. But these days, because real estate has gone up so much in value over the past couple of years, it's very common to see a lot of six-figure claims, $200,000 claims, $100,000 claims, $300,000 claims. I'll ask my editor, pop up a couple of lists showing claims and just zoom in and you'll see what I'm talking about. There are lots of monies just sitting there. So the way this business works is that we get the lists of money that are being held. We locate the people the money is owed to. We reach out to them, usually by phone, say hello, and we let them know that we found a sizable refund that they're owed and that for a percentage we'll go and get them that money. And most people have no idea that in a tax sale you could ever potentially be owed any money. What they think is that, well, the government, they sold my house, so, they keep the money because, of course, the seller is the one that keeps the money from the sale. But they're not quite right. They're making a very serious mistake. And the mistake and error that they're making is that, yes, the government forced your house to be sold, but all that they want to keep is the amount that they're owed in taxes, interest, and penalties. That's all they want to keep. So the rest of it is available if and when you apply for it. So that's what tax sale overages are. You'll also hear them called a couple different names. You'll hear excess funds, overbids, overages, and they're all the same thing. They're all synonyms. The reason they're different names is that Each one of these operates under state law. So a state makes a law about how they do foreclosures and how the process works and who does it, etc. And in those state laws, they have a definition. They'll call them, again, overbids or excess funds or overages. And however it is in the state law is the way they're going to talk about it within the list, for example. So that's why they go under a couple different names, but they all mean the same thing. It all means that it's extra money that's left over after a tax sale because the property sold for more than the taxes that were due, and that extra money is available for the former owner to claim because it's their money. If you think about it, it really represents part of the equity in their house, meaning the difference between how much the house sold for and how much was owed against it. That's the overages money. So of course it should belong to the former owner. And when you think about it, should the county get a big windfall because someone lost their house at tax sale? No. The county should get the amount that they're owed, including, of course, the interest and penalties. But other than that, they shouldn't get a windfall because that money represents money that someone made mortgage payments for years. They bought the property, they maintained it, they paid the taxes. Now, eventually they ran into difficult times and they couldn't pay the taxes. So eventually they'd lose it. But that doesn't mean they should lose all the equity in their house. I think you could agree with that. It's just not fair. So in the business, one of the best things about it is we spend our time helping people who've lost so much, helping them get back on their feet because we bring them substantial amounts of money. Like I said, the core of this business is $20,000 to $60,000 overages. Our average deal inside our office is $52,000. On a $52,000 deal, we're getting them approximately $30,000. We're keeping $20,000 and we allocate $2,000 for costs. We reach out to someone who has no idea there's any money that could be owed to them, and we're typically going to be getting them around $30,000. Can you imagine how happy they are? So this is a really cool business. Great business for someone who really wants to help others and also make a lot of money for yourself and your family because both are available. It's a really terrific business. So if you like this, like and follow for more. If you have any questions, just stick them in the comments section. I'll get to the ones that I can get to, do more videos, and you can continue on your journey to learning about overages. So this is Bob Diamond, over and out for now. If you got value from this video, please like, subscribe, and click the bell so that you'll get notified of the next video I post. And I'll also drop a link in the description so that you can get access to my free training where I will walk you through my simple 5-step process of the overages business. This is Bob Diamond, America's tax sale attorney, and I'll see you on the next video.